Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced in a range, which is pretty typical when you have such a wide range day. And at this point, heading into the open, we're going to be using 2675 to 2875 as the micro bull bear zone to establish the very short-term directional bias. So if we fail at the micro bull bear zone, we can quite easily pull back to the 19 to 21 initial support and potentially even test yesterday's low of 16.5. Given yesterday's strong selling and the momentum that we saw yesterday, if we fail here, we don't necessarily have to hold at 19 to 21 or even 16.5. A lot of times the market will actually extend beyond the previous day's low, find some support, and then start balancing in a range. So on the downside, even though we have these support areas, they aren't necessarily areas where we're looking to go long. That's something that we will have to gauge in real time. And if something is setting up at 1921 where the other markets are holding up okay and the internals are relatively strong, then it might make sense. But the failure at 2675 to 2875 would tell us that the sell side is still in control and we may have to break the previous day's low before we can get any decent buy response. That is the typical pattern after the strong selling that we saw yesterday. So on the downside, we have 12.5 to 14.5 as a support area. It's not really a strong area of support, so just be cautious. At 12.5 to 14.5, it's a low volume node and a area where we broke out from before, but it's not really a extremely strong support zone. So, as the market heads into it, unless again, you see some signs in real time where the internals are holding up better than expected or the other markets are also hitting a key support zone, I think 12.5 to 14.5 is a place where you just want to be pretty careful if you're going to trade it. The better level to trade is the 03 to 05 half and the 08 quarter. Those are better areas where responsive buyers can be active. And given that today is rollover, and that's another note, today's levels are for the E-mini March contract. So, if you're trading the December contract, then simply shift these levels up by 7 points to adjust for the gap, and you'll have the zones for the December contract if you're still trading that. But these zones today are for the ES March 2015 contract. So really the main idea today is that after the strong move yesterday, we're very likely to still be balancing within a range. If we fail at the micro bull bear zone, then we're likely to balance at lower prices. And if we break out and hold above the micro bull bear zone, then we can balance within yesterday's range and test 34 to 36, which is still an area where sellers can be active. That's essentially the breakdown spot from yesterday, and that's also a very key inflection point. So if we fail at 34 to 36, there's still some room to move lower and perhaps come back down to the micro bull bear and even down to 19 to 21. So that 34 to 36 is an important inflection point. If you break above that, then it would invalidate yesterday's breakdown. Then the breakdown idea would no longer be in play. Now we can still balance within a range and we can still find sellers at the resistance zones above, but then we would no longer be in that, strong breakdown type scenario where we have to extend below yesterday's low. Then that scenario would no longer be in play. So 2675, 2875, very key zone off the open. After that, 34 to 36 is the inflection point, and if we fail there, we can still pull back and even go below 2675 to 2875. So those are really the main resistance areas at this point. On the downside, 19 to 21, very likely to get tested if we continue holding below the micro bull bear, and typically the market will test and even extend below the prior day's low in order to find responsive buyers. That could happen at 12.5 to 14.5 if the market is still overall strong. And if 12.5 to 14.5 doesn't hold, then 08 quarter and 03 to 05 half are really high odds spots where buyers can be active. But given that it's rollover, given that the major econ reports are already out of the way. The overall expectation is for the market to balance within a range. So those are our main thoughts heading into the open. Let's see how the market reacts at the micro bull bear zone. That'll give us a good idea of directional bias, and we'll take it from there.